Well, as far as the quantity is concerned, the fall in exports from Venezuela to the United States is not a huge issue because stocks have been rising in the second half of 2018 globally, and there is plenty of spare production capacity out there. But the quality of crude does matter because the crude oil from Venezuela is relatively heavy, but we're also seeing reductions in supply of other heavier sour crudes from Iran, for example, because of sanctions. We're seeing lower output from Canada because of the steps taken by the governor of Alberta. And of course, most of the leading OPEC producers that have cut production significantly recently, you mentioned Saudi Arabia and the UAE and Kuwait, they are also producers of predominantly heavier sour crudes. So within the overall crude balance, we're seeing a fall in supply of heavier sour crudes, and that has led to increases in prices for those crudes relative to the lighter crudes. So there is some action going on within the overall balance. And as we say at the end of our commentary this month, that the quality of crude matters as much as the quantity.
Sorry, just to pick up as a quick follow-up to that, are you expecting then the wedge and the price divergence between the heavier forms of crude and lighter crude to continue then in the future?
Well, if supply from OPEC, for example, does continue to go down, and there are actual fall-offs in shipments and production from Venezuela, then it is possible that that change in the relationship we've seen recently will continue. But we need to see how the Venezuelan sanctions do play out, what happens with Iran in the next few months, and the attitude of other OPEC producers. We're just pointing this out as a key factor that's in the market right now, and it's something we're watching very closely in the future.
Anna mentioned compliance from the OPEC members stood at 86%, but from non-OPEC members was just 25%. That's quite worrying, isn't it, moving ahead for 2019?
Well, it's quite slow, clearly, but I think the indications from Russia at the time that the Vienna Agreement was put together in December, they did say that they would not be implementing production cuts in full immediately, and they would be moving towards their target during the period covered by the deal. So we must wait and see as we move through February and into March what the new data shows us and whether that 25% compliance rate, which is, as you say, low, whether that compliance rate does in fact improve in new data.
I want to ask you about the demand side of things, and this is the second month in a row you haven't changed your global demand outlook. A bit surprising, especially in light of yesterday we saw OPEC adjust their demand outlook a little bit lower. And I just wonder whether or not you are expecting some headwinds in this space, particularly in light of the slowdown in industrial activity we're seeing in Europe. We've indeed got confirmation that German demand for oil has dropped to the tune of 7 to 8% over the last years. So how come your forecast for global demand is so sticky?
Well, it's not that different from the OPEC growth number when you look at the actual numbers. The point we make is very simple, is that in 2018, in the second half of the year, when oil prices rose quite dramatically, many developing countries found very high dollar prices, also made more expensive in local terms by the depreciation of their currencies. But what we've seen since October is crude oil prices falling all the way from 86 for Brent in October down to 50 at Christmas time, and they've increased to around about 60 now. In the meantime, there's less visibility on future interest rate rises in the US, so the pressure from a stronger dollar is less than it was. So developing countries such as China and India are feeling less headwinds than was the case in the later part of 2018. And we think that demand growth in the main developing countries is rather more robust than some other people think. On the other side of the balance, you correctly pointed out that here in Europe, there are some signs of weakness. You mentioned those German numbers, and we're certainly watching that. But even in other parts of the developed world, the United States, which is the biggest single market in the world, has seen very resilient growth in 2018, and it's still going to be growing fairly strongly in 2019. So for the time being, we're sticking with our growth number. And of course, we're watching the economic headwinds. We're watching the news. We were hearing President Trump talking about the China negotiations a few moments ago. So we're watching all of those things. And when the facts change, then so will our analysis.
Right. Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.